Hello traders and welcome to this session. As we promised, I'm here to discuss about our strategy, and here is the strategy B, and we are talking about the strategy B. This is the part 1, and you can follow this series in the next parts. First of all, you have to know that we have a system called Revo. Revo. That's just a name. That is our system, and I'm going to prepare another series to discuss about our system. System consists of the rules and also the strategies. But here at the moment in this video, I'm going to discuss about our strategy B. In Revo system that we have, and it's exclusive for the quality FX trading, but of course there is an interpretation of ICT concepts which is very useful here, and we utilize those stuff to build up our strategies. Revo system consists of two strategies, a strategy A and a strategy B. In this series, I'm going to discuss about the strategy B, and later on you will see, you will learn about a strategy A as well, plus Revo system. In that series, I'm going to talk about the rules that you have to set in place, which is very important. And also definitely in one part I'm going to discuss about the psychology which is required to be fit in this system. So let's talk about some introductory stuff on the Revo strategy B, as this part is going to be mainly theoretical, and then in the next parts I'm going to show you the actual strategy in practice and some examples following that. And after you watch this series, definitely in the later sessions I'm going to apply this strategy into daily charts, which can be very useful for you if you watch our some of our daily or weekly videos, which I'm going to apply this strategy but definitely once I finish this series first. So because you have to master and learn the strategy and to understand all the details about the strategy. Once this is done, then definitely we will apply this strategy in the other videos, and you can watch those examples, day-to-day examples, to master the strategy. And definitely you have to apply it for yourself and back test it to see how it can be useful. Definitely one of the important thing about this strategy is that this strategy is very simple. It's very simple, and also it is made of some easy to understand concepts. Okay, so let me talk about the ingredients which we have in this strategy, which is first of all, you have to consider what we are going to do with this trade, and then I'm going to discuss about the strategy details. Okay, this strategy, in any strategy you can have the big picture time frame. Okay, the big picture time frame here is gonna be a daily chart and also weekly chart. So this is very important. So we are going to talk about points of interest. Let me choose a different color. Points of interest. Points of interest in this strategy is going to be based on the daily and weekly chart. Okay, so both daily and weekly charts is actually they are going to be our big pictures. Okay, so the big picture is going to be on the daily and weekly charts. Okay, so pay attention here. Then the points of interest that we have, okay, points of interest that we have is going to be focusing on two kinds of levels, both in the daily and weekly charts, and focusing on the recent price action. Okay, focusing on the recent price action. The recent price action on the daily and weekly chart can be like last 1 month or 2 months or even 3 months. Okay, so these levels, which I'm going to tell you first, number one is going to be the order block. Okay, so the order block definitely can be either bearish or bullish. Okay, so both of them depends on the price action. We are going to focus on drawing bullish and bearish order blocks and finding those levels and specify them on the daily and weekly chart based on the recent price action. Okay, and these levels are going to be our point of interest number one, and number two is going to be the fair value gaps. Again, those fair value gaps, which is applicable to bearish institutional order flow or bullish. Okay, so both of them. So we have two types for our point of interest in the daily and weekly chart. Please don't worry, as I'm going to explain this in full, and definitely after you watch these part and this the whole series, which I'm not sure how many parts are going to be, but definitely minimum 3 parts are going to be, so you have to watch all, and even not one time, to understand the stuff. So this is just a theoretical session, so I'm not going to go to practical thing and to show you exactly what is going to happen. That is going to be our next part number 2, which is going to be posted soon as well. So in review, I said the big picture is going to be daily and weekly chart. So you have to focus on these two charts to find the levels which are points of interest. In the recent price action, I told you it can be 1 month up to 3 months, maximum 3 months, not more. We are not interested to look at more than 3 months. Okay, the types of levels that we are going to focus are either order blocks or fair value gaps, both bullish and bearish. And when I'm going to the chart, you will understand better that one of the important things is that we have to reduce and minimize the number of levels or point of interest which we are going to pick up. Okay? Because I don't want to make the chart full of the lines. Okay? I think minimum can be definitely 1 and maximum like 4 lines for the daily, and also maybe 4 lines for the weekly. Definitely weekly levels are going to be less than daily in most of the cases. Okay, so maybe 2 weekly levels are enough, or maximum 3, and for the daily we may have more, depends on the recent price action and how many order blocks we have and how many fair value gaps are there. As I told you, we will try to minimize the number of these levels to find more accurate trades. Then the next part which I'm going to discuss about is going to be the entry. Okay, because each strategy, first of all, you have the big picture view and you have the point of interest. After that, when you see the price action is reaching to that point of interest, or actually approaching those point of interest, then you have to look for entry. Of course, the entries is important. Then I'm going to talk about stop loss and take profit, which is suitable for this strategy. So let's talk about entry types, because in this strategy we have 3 entry types. Okay, so entry types and of course when you see each one of these entry types, which I'm going to discuss now, any one of these can be chosen, and when it is found, you can trade based on that. So number 1 entry type, I call it aggressive, and this aggressive type is going to be based on the H1 time frame. Okay, is going to be based on H1 time frame. And how this is going to work in theory, if I want to explain to you, in the older video, one of the older video which we have in the channel, we discuss about reversal candle. For those of you who didn't watch that video, I recommend you to go and watch that video. Anyhow, even if you don't want to do that, I'm going to define that in the next part, first of all, before starting to talk about this strategy, because that is the main element of the aggressive and also another entry type. So 2 of our entry types, 2 out of 3, are going to be based on the reversal candle. And in practice, I'm going to show you exactly what is that reversal candle. But basically, reversal candle in theory, if I want to define it, when you have the bearish price moves and you see the last candle is engulfing the whole previous candle, and the body of that candle, the last candle, is red, then it means you reach to the end of that down move. Okay, and opposite also is valid. It means when you have upside move, bullish move, and then last candle is going to be in green and engulfing the previous candle, then you have the end of the bullish pressure. So that is called reversal. So the bearish reversal and bullish reversal. So in this entry type, which is based on the H1, so first of all, we already put our lines in the chart based on the daily and weekly, those in points of interest. Then we move to the 1 hour chart and we will wait for that aggressive entry based on the reversal candle. Okay, so here I want to put the aggressive entry is going to be based on the H1 chart. It means you have to wait for the H1 candlestick to be closed properly, and if it is a valid reversal candlestick approaching point of interest, then you are ready to enter into the market. If it is a bearish reversal, then you should go for sell setup, and if it is a bullish reversal, then you have to buy the market. Okay, let me talk about the second entry type, which is going to be called high risk and high reward. High risk and high reward, and this is going to be based on the 15-minute chart. Okay, so the reason I'm putting this in the entry type number 2, it's because it's exactly similar to entry type number 1. The only difference is the time frame. So in the first entry type you have 1 hour time frame, and in the second one you have 15 minutes. And again, the same thing is valid for the high risk, high reward. It means you are risking high because you are opening the trade as soon as you see the 15-minute candlestick is closing as reversal candle approaching that point of interest. Okay, don't worry at all. This is just for your understanding as a theory. I'm going to show you all this in the next part. Okay, and then we have the third type for the entry, which is going to be the number 3, and I call it conservative entry based on the 5-minute chart. Okay, and remember, this entry type is totally different than the other two because it's not relying on the reversal candlestick at all, and actually it will focus on that point of interest. Any rejection or actually displacement in 5-minute chart from point of interest, whether bullish or bearish, kind of displacement creating the fair value gap and shifting the market structure. Okay, so these 3 conditions should be there: rejecting fast and hard as kind of displacement to the downside or upside, of course for the sell setup or buy setup, and then creating fair value gap and shifting the market structure. It means breaking the last low or breaking the short-term low or short-term high. Okay, for those of you who know about the market structure shift in our videos, all of this concept, by the way, I'm emphasizing now as displacement, fair value gap, order block, market structure shift. All of these videos you can find it in our channel. So if you have no idea about any of these concepts, I highly recommend you to go and watch those videos first before starting to understand this strategy. This is actually kind of prerequisite before going to do the strategy. So until now, what you know about the strategy B is the big picture, is the point of interest, and entry types. Now, of course, you want to know about the target profit and stop losses. So let me talk about a stop loss first. The stop loss, as I'm going to put it in the red color, for each type of this entries, we have different stop loss. Okay, for the stop loss for the number 1 actually and number 2, we put same stop loss. We are going to put the stop loss 15 to 20 points, but I'm saying points is actually can be pips in the forex. So points or pips, whatever you want to call it, 15 to 20 points above or below. When I'm saying above or below, definitely you understand. It means when you are buying should be below, and when you are selling should be above. Above or below what? The point of interest. So that level which you highlighted initially. And by the way, it is very important that you update that point of interest on a weekly basis. Okay? So every Sunday, before starting the market on Monday, you have to go to your chart and open the weekly and daily chart based on the recent price action. Again, I emphasize recent price action. It means 1 month up to 3 months. And update those levels, because these levels means order block and fair value gaps are going to be changed every week. And you may need to update it on a weekly basis. So it's better you double check every week before starting the market to be on the right mindset about those levels, and do not make mistake about those levels. Okay, so back to the stop losses. So this is going to be the first type of stop loss for the first type and the second type. So both of them are going to be have the same stop loss. A stop loss, regardless of H1 or M15 candlestick, is going to be placed where? Above or below point of interest. Point of interest is what? Is that level, whether order block or fair value gap. You want to see it in action? Wait for the second part of this series. And what is the stop loss for the conservative entry? That is going to be above or below rejected the M5 candle. Okay, so when you have the market structure shift, you will put it exactly on the whether above the M5 candle, the rejected candle, or below. If you are selling, you should put it above M5 candle, which market structure shift took place, or below in case you are buying. And now let's move to the last part of this theory, which is going to talk about the strategy take profit. Okay, take profit is going to be take profit levels are going to be based on the H1 chart. Okay, and it's going to be based on the discount or premium levels or actually based on discount or premium matrix elements. Okay, I understand. Maybe you're confused now, and you will ask me what is the discount premium matrix elements. Okay, don't worry. I'm going to explain to you what is that, and in the next part definitely I'm going to take some time for you to understand that better. But basically those elements, so when we are talking about discount, it means when we have the buy setup, so when we have the sorry, when we are buying, so we are looking to the those premium levels in the H1 chart, and when we are selling, definitely we have to look at the discount levels to take profit. Okay, what are those elements? Actually, those elements are consist of uh, can be previous high or low in term of liquidity, in term of nearest liquidity, in term of nearest liquidity. Actually, this is going to be the best and easiest take profit, which you have to consider, if especially if you are the beginner and you just want to take profit as soon as possible without taking more risk and keeping the trade for a longer period of time. So I highly recommend you to use this as your take profit. It means the previous high or low in terms of nearest liquidity. It means you have to look for the buy side and liquidity in the recent price action based on the H1 chart. Don't forget. So when you are choosing your target profit, you have to be on 1 hour chart only. Okay, regardless of which entry type you choose. If you are in the aggressive mode, still you have to use the take profit in the H1. If you are using the 15-minute chart as entry, again you have to use take profit in the H1. And even in the 5-minute entry, again I'm emphasizing, even in the 5-minute entry, you have to rely on H1 chart to select your target profit. And the best target profit is going to be the nearest buy side or sell side liquidity. So if you are buying, you have to see where is the nearest buy side liquidity. Okay, and if you are selling, definitely where is the nearest sell side liquidity. Or basically, what does it mean by buy side liquidity and sell side liquidity? It means where are the stop losses for retail traders. Okay, we have to find where are those stop losses placed in the near term. And other examples for matrix elements can be let me just put some couple of examples, like the order block or fair value gap or breaker or if you want to be more advanced, then you can see the rejection block. But as I said, you can choose the nearest sell side or buy side liquidity as your target profit. If you are a beginner and if you want to start trading and basically if you are understanding this strategy and you are expecting this strategy to be profitable, in a short-term period of time, the best is to take profit in the nearest buy side or sell side liquidity. But otherwise, you can go for the next fair value gaps or next breaker. If the market structure shift is there in the 1 hour chart, definitely the market is pushing up back to retest that breaker, or even retesting the bearish order block, bullish order block, and so on. So this is all about this Revo strategy B, which I wanted to talk to you about the theories, and we will go deeply into the these concepts in practice, and I will show you the chart in the next part, which is going to be part 2 and will be posted hopefully soon. I don't want to keep you waiting for more than 1 week. I'll try to post it maximum in 1 week. And then after that, in part 3, I'm going to show some examples, and we can practice the strategy B together in the part 3. And I will see if more than part 3, part 4 or 5 is going to be required. Otherwise, we will make it as a series of 3 parts. And then, as I said, I'm going to make some videos about Revo system, the rule part and the psychology part, and then finally later I'm going to discuss about and reveal our strategy A. Definitely both of our strategies can be profitable based on the accuracy of the levels you are choosing and the way you are finding the entry types. But definitely strategy A is going to be more reliable, and strategy B is going to be riskier, and it has more risk, but definitely it has good reward as well. While a strategy B is going to focus on some more consistency, and the trade ideas are coming from a very strong base. Okay, anyhow, both of these strategies are in our Revo system, and we will talk about that soon. Thank you for watching, and hope you will have a great trading week, and talk to you later. Thank you.